If you're an investor in Franklin Templeton debt schemes, you would have seen a major drop in your fund values. In this video, we tell you what has happened and why it has happened. There are also some major lessons to be drawn from this crisis. Hi, this is Neil Borate from the Mint Money team, and this video is all about what has happened with Vodafone Idea and the mutual funds that held its debt paper. Interestingly enough, this is not the first time that this has happened with Franklin Templeton. In 2016, Franklin was exposed to bonds issued by JSPL, which defaulted. At that time, the fund house took that debt paper on its own books, meaning that it protected its investors from those losses. However, that is not happening this time around. Franklin Templeton AMC, along with 3 other mutual funds, UTI, Aditya Birla Sun Life, and Vodafone India, hold papers of Vodafone Idea. What's happened with Vodafone Idea is that the Supreme Court has dismissed a review petition concerning AGR and hence has brought a liability of around 50,000 crores on Vodafone Idea to be paid by 23rd Jan. This proposition looks almost impossible for that company, and as a result, Franklin Templeton AMC had decided to proactively write off the bonds of Vodafone Idea that it held. The exposure in the debt schemes of Franklin Templeton Mutual Fund to Vodafone Idea is in the range of 4 to 7%. This is the amount by which the various debt schemes of Franklin Templeton, which had exposure, were down by. As a result, Franklin Templeton has written off its entire exposure to Vodafone Idea. On Friday, other AMCs took write-downs of their holdings of Vodafone Idea debt of around 30 to 60% of the value. In other words, there could be more in store. On the flip side, if Vodafone Idea succeeds in its curative petition, or if the Government of India grants a reprieve to Vodafone Idea in making payments, the NAVs of those funds could also recover. Some of the other AMCs even have a higher exposure as a percentage of scheme assets to Vodafone Idea. For example, in UTI Credit Risk Fund, the exposure is 17.55% of scheme assets, meaning that if the exposure completely defaults, the scheme will lose 17.5% of its value. Now you might be wondering, why is there no side pocketing in this case? The answer is that since there has been no formal downgrade yet by a credit rating agency such as CRISIL, CARE, India Ratings and so on, the mutual fund, Franklin Templeton, cannot go for side pocketing. This can only be done when the papers of an issuer are downgraded below investment grade, and that has not formally happened yet. Now the next question is, and perhaps the most important one, will you get your money back? This is possible. It has been reported that Vodafone Idea is contemplating a curative petition in the Supreme Court. In addition, the government might extend the time period for Vodafone Idea to make the payments, and the company might still survive. It is difficult to say one way or the other. Now, what can you as an investor do about it? If you are a Franklin Templeton investor, there is nothing you can do. The exposure has already been written off. In addition, the AMC has restricted inflows into the affected schemes at rupees 2 lakh per day. So if you're a speculator and you want to enter the funds in hope of a recovery and a windfall, this too is difficult. If you're an investor in any of the other AMCs, you can exit, but the other AMCs could write down their exposure on any day, and you might just end up with a vastly lower NAV than what you thought you were getting. Dipali Sen of Srujan Financial Advisors has said that investors should stay put. But she's made an exception in case of UTI Credit Risk Fund, which has, as you might recollect, a 17.55% exposure to Vodafone Idea. If you are considering an exit, make sure that you have calculated the tax and exit load payable and considered this while making your decision. Are there any lessons that you can draw from this crisis for the long term? Yes, there are. Normally, investors only perceive credit risk in credit risk funds. But as this episode shows, credit risk can also lie in other kinds of funds like low duration, short duration, or income opportunities. Senior executives have told me that Franklin Templeton AMC communicated to advisors that certain schemes, such as the affected ones, have had high credit risk, and they were fully aware when such schemes were recommended to clients. But this was not discussed in the wider public, and the common man on the street was not aware. The only solution for you when you're investing in risky debt funds is to go through a good advisor. Thank you for watching Mint Money. We will keep you updated on further developments on this story. Thank you and goodbye.